Hello friends, this video I am making to explain to you few circulars which were issued on 6th July 2022 by CBIC. Circulars are basically a clarification or a suggestion which CBIC gives to their officers to follow. So I'll be making few videos on some important topics in circulars, which actually it is very important. So I will go one by one and throw light on that. So this video I'll be telling about circular number 171 dated 6th July 2022, which is basically they have given clarification on an applicability of demand and penalty provisions in the case of fake invoicing. Now, in today's situation, in today's circumstances, the officers actually are confused if in the situation of fake invoice from whom the tax has to be collected. Since there is a supplier, there is a receiver, and there is a chain of receivers and suppliers. Finally, from whom the tax has to be demanded. And you can see in the practical aspect, the tax is actually demanded from every person, that is supplier, recipient, supplier, recipient. So in one transaction or one chain of events, the taxes are collected multiple times. So to avoid this confusion, they have issued this circular with some examples. So the same example they have in the chain, they have actually clarified from whom the tax can be demanded, from whom the penalty can be demanded. Now in the first example, they have actually mentioned there is a supplier A and there is a customer B. Now supplier A issues an invoice to customer B. Now this is a fake invoice. There is no actual supply of goods or services. So supplier A issues a fake invoice to customer B. Now in this scenario, generally what happens? A files GSTR 1, but he may not file GSTR 3B. So there has to be recovery. So what this circular clarifies is, in this present situation, A actually is not supplying any goods or services. He is only issuing a fake invoice. So there is no supply of goods or services. Hence, there cannot be a recovery or there cannot be a demand of tax because GST is applicable only on the supply. And if there is no supply, there is no GST. So since A is not supplying to B, there is no recovery or demand which can be raised on A because there is no supply. There can be penalty provisions under section 122, which is basically for an issue of an invoice without a supply of goods. So there can be a penalty provision, but there cannot be a recovery of tax. So this is an example 1 which the circular says. So in continuation to example 1, they go to the second leg of this transaction where B receives the invoice and takes the input tax credit. Now B takes the input tax credit, but he doesn't receive the goods or services. So whether it is right on B's part to take the input tax credit, as per section 16 clause 2 subclause B, a recipient cannot take the input tax credit unless he receives goods or services. In this case, he has not received goods or services, so he is not eligible to avail the input tax credit, but he does. So in this scenario, a recovery can happen from B because he has taken the input tax credit. So what this circular says is, customer B, without receiving the goods or services in contravention of the provisions of section 16(2)(b) of the CGST Act, shall be liable for the demand and recovery of the said ITC along with penal action. And it goes further and says, as per section 75 subsection 13 of the CGST Act, if penal action has already been taken under this section, then for this violation, no other penal action can be taken against B. So, recovery can be done against B, and penal action also can be done against B for availing the input tax credit. So, for A, it will be only the penal action. For B, it will be recovery of tax and penal action with interest. Now, example 3, it is again a continuation of the first and the second leg of transaction. Now, in the third leg of transaction, B again issues a fake invoice to C. So now in this case, B becomes the supplier and C becomes the customer. So B issues fake invoice without supplying goods or services to C. In this scenario, what the circular says is, again, there is no supply of goods or services from B to C. Hence, there is no GST. There has to be no recovery of tax for the supply or invoice from B. But again, there can be a penal provision, penal action taken for taking the input tax credit, which is not eligible. And the demand for a recovery of tax will shift from B to C, because in this scenario, C is finally availing the input tax credit and adjusting against the output. So the final adjustment is done by C. So any recovery of tax has to be done from C. So if you see A to B to C, whoever is supplying the goods is not liable to pay tax. Final customer who is availing the input tax credit has to bear the tax if there is a fake invoice detected. So B shall be liable for penal action for both. So in this scenario, B will be liable for penal action, one, for wrongfully availing the input tax credit. Second, issue of fake invoice without supply of goods or services. So he may be liable for two penalties, whereas C will be liable for wrongly availing the input tax credit. So again, finally, what the circular says is, the actual action to be taken against a person will depend upon the specific facts and circumstances of the case. So case to case basis, the situation may change. So this is a general direction which is given on case to case basis. This is a very important circular which is on fake invoicing. I request everybody to please go through the circular. Circular number is 171 dated 6th July 2022. Thank you for watching the video. Bye.